Right, guys, so we're kicking things off today with another market review. I've got my good friend Trader XO on the stream with us today. But before we begin, we need to get the disclaimers out of the way. This is not investment advice. The content here is purely educational. I am not a financial advisor, and the content in these videos is not financial advice. Now, with all that said and done, how are you, XO?
I'm very well, thank you. Happy Q2. Good to
Happy
connect.
Q2 indeed. So, as you know, we are 4 days away from the halving, and we had some very interesting price action over the weekend. What are you looking at, and what are your thoughts on the market?
So I think reflecting over Q1, it's certainly been a fascinating market. There's been some great opportunities in meme coins, the Solana ecosystem. Bitcoin has rallied. Ethereum somewhat hanging in there, but I think Q2 is going to be slightly more challenging. We've seen a relentless trend for the last 5 to 6 months, ever since the QRA trade in October, all the way through to March. So I feel as though the easy money in certain sectors has been made, but I still believe that there is some fantastic opportunities out there, and it's a case of whether we do see a corrective phase in the market at some point, whether that's Bitcoin, and let's just assume that Bitcoin does pull back lower down into that 50k level. I'm not sure when it will happen or if it's likely to happen anytime soon, but it's certainly something that plays on my mind that could lead to some short-term downside risk. But if that is the case, then I think that presents a really good opportunity to not only position into Bitcoin, but really identifying some really excellent players and altcoins out there and narratives as such.
Sure. Okay, cool. And what sort of timeframes are you thinking about when you say that?
So for me, the way I look at the market, and taking macro into consideration, I don't want to delve too much into macro. The key thing for me and the key distinguishing fact for myself is global liquidity. One of the things that I did really well towards the end of 2021 and throughout 2022 was tracking global liquidity and recognizing that global liquidity was trending lower. And as a result, because there's a sensitivity nature of cryptocurrencies with global liquidity, that was a massive risk-off factor. Now, over the last 12 to 18 months, I generally wish I paid more focus to global liquidity because it's clearly led on the way up, and we've seen all risk-on assets rally significantly well. And I think that's just something to keep an eye out on. So in terms of time frame, when I think about the bigger picture, I view the market, I look at certain altcoins and I think, right, if there are significant pullbacks, it's probably a good opportunity to position into those altcoins, because we still look at some of the layer ones that have yet to perform. AVAX, as of this recording, is hovering in the $30 region.
Sure.
I do believe there's every possibility that could go to $100. When? I don't know, but do I want to have exposure? Absolutely. And do I want to be cognizant of the fact that, well, Bitcoin today pulled back to 60k the other day. It's hovering around 65. Could it break down to 50s, 52s? Yes, why not? It could. I'm not saying it will do. And I'm not saying that I'm looking to short the market down to 52s, but I do believe that in itself could be a problematic risk. But at the same time, for anybody who's prepared for that scenario, it's going to present a fantastic opportunity. So, there's certain people out there who are probably still, let's just say, sidelined. I'm not sure what sideline means, and there are other people who are probably heavily exposed. So I do believe we're in a very delicate situation in terms of just positioning in the market. And
Sure.
I just think there's a lot of time, still a lot of time in the sense where several weeks from now, I think there's going to be ample opportunities to start positioning into projects, into altcoins that have yet to run.
Sure. Yeah, that makes complete sense. Interesting price action over the weekend, right? Obviously had a huge scorch down. You can see here that we've taken out this low here. Did so more so on the perpetual exchanges more than spot on Binance, for instance. What do you reckon? Do you reckon we'll take out this wick here, or do you reckon this is it?
I think that if there's one thing that I've learned over the years, it's not to predict what the market will do. So whether it goes down there remains to be seen. Whether Bitcoin goes higher, I couldn't tell you. All I know is that should the market trade that 58, 57 region and hold, I think that's a buying opportunity. If the reaction from that level is weak, that opens the floodgates to potentially 52.
Sure.
So for me, I as a trader, I don't concern myself too much with the guesstimation of where I think the market could go next. I prefer to react at levels when price gives me a reason to react. That's where I do my business. So I always keep an open mind, and I think that's the one thing is that we often get carried away on Twitter, or we all have loosely held opinions like we think X is going to go to $1 billion market cap. We don't know when, but we believe it could. But in the near term, what if the market turns around and there's some geopolitical event which causes a further cascade down the markets? We don't know. So I think that's why the macro is going to be important, not just the macro, but the geopolitical landscape. There are some risk factors out there, although they're not being imposed on the market, they are there in the background, and it's something that we just need to be aware of, that if such an event was to take place, how would it impact our own P&L, and are we prepared for significant drawdown? So the one thing for me is, over the years, I think I shared a tweet the other day, there were several large events that happened in crypto which I've managed to survive, and it's all about survival. Everybody's a genius on the way up, but how many people actually cash out and walk away with a significant amount of unrealized profits into realized profits? And I think that's the key for me. It's not about being a genius, it's about operating intelligently and recognizing the risk to the downside, but that shouldn't deter you from being aggressive to the upside as well.
Yeah, 100%. And I like what you said about being reactive as opposed to predictive. I think that's something that I've definitely integrated into my trading system over the last few years. It's also a different way you can phrase it, is fact over thought, you know?
Absolutely. And I think I put my hands up. We're all humans. I did, in all honesty, lean heavily towards macro in 2023 when, look, we learn from our experiences. What I did very well in 2022, I should have carried out into 2023 and just track global liquidity. And that's where I've gone back to basics. Just look at price action, look at the charts. The macro is always going to be there in the background. It's just making sure that you're aware of the risks. That's all. But remain objective in our approaches. And as always, the chart is a compass ultimately. So that's kind of my back to basics approach in terms of trading.
Yeah, 100%. And I think it's important to note there, XO, that, like, you know, we can think that things may happen, but we shouldn't lean too heavily on those thoughts. You know, for instance, this level down here at the 59s is a level I really want to be taken out. You know, I think that there is some clear latent liquidity down here. I'm saying to myself, if price gets down here, then great, we can think about taking a trade. But I'm not taking a short up here as such, you know, thinking it will go down to those lows. And I think we're at a pivotal moment here on BTC. Looking at the 4 hour, you can see this cluster of interest supply here around the EQ as well. So I think, you know, in moments like this, it's quite nice to pay attention to what we're looking at on the charts. And, you know, when we're given very clean parameters like this, it makes for ample trading opportunities as well. I want to just quickly flick over to a chart I wanted to show you and go through with you, XO, which is the Bitcoin dominance chart. In fact, actually, just to simplify things, let's start with Bitcoin itself, right? So just in terms of what we can sort of expect from the halving, you can see here that we have, you know, all the previous halvings marked out, and then we have our halving week here. And you can see that what happens post-halving is actually a period of about at least a month of just, you know, either slow bleed out or consolidation. So, you know, if we were to expect some range continuation here and see things carry on moving sideways for, you know, a prolonged period, I don't think that would surprise me particularly. What do you think?
No, I think I agree. And again, one thing that I've started tracking more carefully is global liquidity. And it's been impressive just looking at the correlation on the higher timeframes between global liquidity, equities, NASDAQ, and Bitcoin and cryptocurrencies in general. So, and I alluded to this actually the other day. Once we got the significant sell-off, in my opinion, there were many altcoins that lost their 12, 21 daily EMA structures. Yeah. And what that generally means in my books from experience is that, look, yes, you're going to have the odd altcoin which is going to outperform the majority of the market. You look at Ondo, phenomenal performance. But when you look at other altcoins, they have broken their structures. they have just printed a lower low in terms of the daily time frames. So my expectation is, and it's played out quite nicely actually, is a reversion trade. Reversion trade back up. The question is now, if we're seeing what is a lower high, are we likely to see a higher low or a lower low?
Yeah.
And if it's a higher low, then I think there's more probability of altcoins be reversing from this initial sell-off. If it's a lower low or an equal low, that I believe is slightly more healthier in the longer run, because you are now going through, for the first time over the last 6 months, a period of consolidation, reaccumulation, a base being built, ready for that trend later down the year, maybe towards the end of Q2, maybe in Q3. Again, timing when these things happen is very difficult. You just have to position for them and give it time, and eventually you should hopefully latch onto the trend. So there's two ways that I play the market. One is I try to position into my spot plays during accumulation, and then I really try to floor it on, which again, something that I've coined as the tail side of accumulation, which is you're looking for the momentum trade, because it's the momentum, the trend up, is where you're going to make the most amount of money.
Sure.
In the shortest period in terms of time, and that's where you really want to latch on and floor it hard. In a range bound environment, it's going to be choppy. It's going to test your patience. Many people will just throw the towel in. I call it time capitulation.
Yeah.
So it's just understanding how we're going to play the two environments, but also at the same time thinking about, okay, what if there is a geopolitical risk out there? How is that going to affect the markets? And am I in a position where, should the market correct 30, 40, 50%, how is that going to affect my portfolio? Or how will I hedge out? Or where do I place my stops? So yeah, I think there's many hurdles ahead of us. It won't be plain sailing as 2021 was.
Sure.
But yeah, like I said, I think as a trader, you've really got to be excited about the prospects that lay ahead.
Yeah, 100%. And yeah, I completely agree with what you're saying, RE spot positioning. I think I've been getting some questions recently about spot positioning, portfolios, allocation, whether to be positioned into altcoins or not, etc. And yeah, I've done some research on the Bitcoin dominance chart. Here we're looking at the weekly, and you can see that post-halving, again, there's, dominance doesn't actually drop off for some time. You can see here the previous halving and the one beforehand. It was actually 231 days exactly on both accounts before we saw that huge scorch off in dominance. So that's something that was very interesting for me. But then I sort of looked into total 3, and you can see that actually, even though dominance wasn't falling off a cliff, we still had, huge increases in the total 3 market cap during those periods. And you can see here in the last cycle, we had 145% increase, clean SR flip here on the weekly, and then continuation. At this point here, this green line is when dominance really starts falling off the cliff, and when we have, let's call it the extreme part of alt season. So, the question is, will we have the same again this time? It's hard to say. But I think regardless, personally, my stance is, and I've said this to you before, XO, that, this year for me is full bull. Whether we see periods of consolidation, chop solidation before that, then, that's something that could well be seen. But yeah, I think, this is also the beauty of where the fundamental analysis comes into play, XO, as well, as I'm sure you'd agree, because, yes, we can look at these charts and say that, this is happening and that's happening, but there are always outliers. Those with the strongest fundamentals will be outliers. There will be outperformers. So, there's so much to be said for having a wide skill set in terms of both TA and FA.
Absolutely agree. And I've alluded to this in the past. In bull markets, you want to be a hybrid. You want to be a hybrid of technical analysis and fundamental analysis. In a bear market, fundamentals don't mean shit. On a trend down, fundamentals don't matter. In an uptrend, fundamentals absolutely matter. And again, I look at Ondo as an example. It's been phenomenally strong in comparison to the majority of the alts out there. So
yeah, and coins such as Tau this weekend, they held up extremely well.
Yeah, fantastically well. So I think that serves well overall in terms of the crypto market, because you want to see your outliers performing the best. Because if they are, then that gives you hope that, you know, eventually we will see capital rotate into the altcoins. The cause of concern is when the strongest alts also happen to suffer on these big sell-off events. And for whatever reason, when you have market weakness and they can't seem to reestablish their momentum to the upside, that is when you've got to think, hang on a minute, the dynamics have changed here. But I think we can take a lot of positives from certain altcoins like Tau, like Hondo. There's other altcoins out there that have bounced significantly well from the initial sell-off that happened over the weekend. So, you know, for me, at the end of the day, I just think, again, this isn't actionable information. I just feel as though the next 3-4 weeks, heading in towards the end of April, early May, I think we're going to see a lot of chop. And the reason I say that is not just because I'm plucking my finger up in the air and saying, yeah, we're going to see a lot of chop. One, I'm looking at price structures across the board. Two, I'm just looking at the, like I said, the liquidity perspectives, and there's just a few gray areas over the coming 3-4 weeks, heading into the end of April, early May, and let's see what happens. You know, I don't want to say too much on this episode, but
yeah, that's okay. I think it's good you're paying attention to things like global liquidity because, you know, yes, you know, as they say, history doesn't repeat itself, but it often rhymes, etc. And yeah, we can look at all these fractals, but fundamentally, this cycle has been already super different. If you know, look here on the 2016 cycle. So if we just mark out the previous cycle as a sort of range here, and you can see that basically the halving occurred probably around the 70% mark here of that cycle, of the previous cycle, that is. And then, you know, if we do it again here, we can see that yet again, you know, the halving occurs around that 60% mark, 70% mark, whatever it is, just above the midway point. And, you know, here we're tackling it at the previous cycle's all-time high. So it has been super different this cycle. So yeah, whether we see any repetitions in fractals is yet to be seen. So I think it's good that you're paying attention to things like global liquidity and other factors that might influence the charts.
The thing with myself is I'm generally very aggressive. If I see a reason to get out of the market, I will flip bias and start shorting aggressively. So for me, although I may lean towards a bullish bias for the remainder of 2024, I don't think it's going to be plain sailing. There is going to be, like I said, obstacles and hurdles along the way. But I'd like to believe, well, for now, I'd like to think that we will see that drift and continuation up, and that any 20, 30, 40% correction, which we probably won't have seen the last in terms of what happened over the weekend. I'm sure there's going to be some more liquidation events occurring over the next few quarters. You'd have to think that, you know, keep buying the dip, but eventually there's going to be a time where you do get that cascading liquidation, and that will be it. And you have to, again, just prepare for each one of those. When the market's getting a bit frothy, when it's getting a bit hot, when there's quite a lot of jubilance and euphoria, just be careful out there. Really start, you know, having a look around your timeline. You'll see calls last week for Bitcoin going to 70, 80, 90k as soon as it was trading in the 70 region. Well, we pulled back 10k, and you saw what happened with altcoins. So you've just got to have your wits about you, be razor sharp, and always be thinking about the downside, no matter how much, you know, bullish sentiment you may have or whatnot. It only takes a couple of bad days to absolutely annihilate your portfolio, and if you can avoid those days, you'll come out to be very successful at the end.
Yeah, exactly. And I'm sure a lot of our viewers experienced a lot of pain over the weekend, unfortunately. But it is the way it is. Do you have any, you know, sort of more hopeful words to those that are holding spot or altcoin portfolios? You know, the one that I could probably say is that moves that happened over the weekend, they are commonplace in bull runs. As you can see here, you know, the last cycle we had a 28% correction on total 2. Again, we've had that just this weekend. So, you know, what I would say as a calming word to those that are still holding spot altcoin positions, that these things do happen. You know, you have to weather the storm, and, you know, nothing comes easy.
In a nutshell, a basic set of moving averages will outperform the majority of market participants out there. So throw on some MAs, and if the trend is healthy, it's still continue to the upside, you should be in a good position. You're kind of looking at the weekly, 3-day, daily timeframes. I'm a big fan of the 21 weekly moving average and the 12 and the 21 EMAs on both the 12-hour, the daily, and the weekly. And yeah, like I said, we got the pullback the other day right into the zone that I really wanted to see. The question is, when you have these sharp sell-offs, one of two things happen. You're either going to get the V reversal, or you're going to get the initial bounce, and then price pulling all the way back down towards the lows or near to the lows, so it retraces the initial bounce.
Sure.
And then you go through a phase of consolidation. I generally prefer the phase of consolidations because they give you time to position into the spot plays. I enjoy aggressively bidding the aggressive sell-offs because they generally give you the best bounces. And we've seen that over the last few days. You know, the market sold off on Saturday. Many altcoins are up 40, 50, 60% in a matter of 48 hours.
Yeah.
So should price revisit the recent lows that are being printed, I think you can start mapping out a potential level for a range low and start looking to do business around those range lows. And again, keyword should price retrace the initial bounce.
Sure.
And then and if that happens, then I would then lean into, okay, right, we're probably going to be range bound for another few weeks, maybe another month or so before any continuation up. Or I'd like to think before any continuation up as opposed to any continuation lower down, because I think if it's lower down, then something semantically isn't correct out there in terms of, being risk on. But we can only trade what we are presented with.
Yeah, I completely agree with everything you've touched on, Exo. Yeah, really appreciate you hopping on the channel. Is there anything else you want to say? Some final words to my audience?
In all honesty, I think just enjoy the markets. Be positive, but be cognizant of downside risk or risk events. Like I said, I think macro will play a part at some point later this year. Possible geopolitical events that may occur as well over the coming months. So just something to be aware of in terms of downside risk.
Sure.
But other than that, I'm fairly optimistic for now with regards to the markets in terms of continued upside.
All right, dude. Well, listen, it was amazing having you on, and yeah, have a lovely day.
You too. Thank you.
Cheers, man. All right, so that's it for today. If you're new here, I very much recommend checking out the other content on my channel. We do market reviews on a regular basis, as well as deep dives and FA on upcoming projects that we're bullish on before they launch. And we've even got a full free trading course on the channel, so tons to get stuck into. Hope you all enjoyed today's session, and as always, happy trading.